Hi, today I want to talk a little bit about applying for a mortgage. What are some things you should consider when you apply for a mortgage? Well, you got to remember, this is probably the most expensive thing you're going to buy, and it's a really big deal. So you want to be prepared when you go in, think about buying a house to get a mortgage. Getting a mortgage is a huge aspect of buying a home for most people. And it's not easy, and it's definitely not easy today. Lenders are very picky about who they use or who they give loans to and the requirements to get them. So, some tips from 14 real estate experts include: start financial planning in advance. So you should probably start, if you think you might look into buying a house, you should start about a year ahead of time and prepare for it. You want to plan your home purchase, and you want to find out, from maybe a financial planner, what's the best path for me to take to get into the opportunity to buy a home, and then get pre-qualified. One of the biggest mistakes people make is they don't get pre-qualified soon enough, and they start looking at things they can't afford, and it's really hard to make that adjustment. You might be surprised what you're qualified for as well. So it's very important to know exactly where you stand on your credit and what the lender thinks you can afford, not just what you think you can afford. And then speak with a financial advisor or a mortgage broker. Once again, definitely looking at what you can afford, but also what are the down payment requirements? What are my closing costs? So, there's other fees involved. It's not just, okay, I'm going to have a 20% down and that's all I need to save. You have to save more than that, I'm sorry to tell you. And then that also impacts the type of loan. If you're FHA, you're 3.5% down. You can get a 10% conventional. You can even get a 5% conventional. So there are just different types of loans that are out there, and you want to make sure that you can get the loan that best suits your needs. And then cleaning up outstanding debt. It's really important to try to reduce your debt, and especially recurring debt. So if you have credit cards that have debt on them, anything you can do to reduce those, take the highest balance one, the highest interest one, whatever you can, and just start paying those off. Try to clean those up, because that's going to get into your debt to income ratio, and it's going to limit what you can afford and what lenders are willing to offer you. And paying down debt of all kinds is good. And then as you're paying down debt, also check your credit report. Look for inaccuracies, or look for things that may be old, outdated, and try to get them off of there. Because anywhere you can improve your credit score, you can get a better interest rate, and you can save a lot of money that way. Recurring debt is a big one. And then establish consistent, stable employment. Most lenders are going to require you to be in a position for 2 years or more. So it doesn't have to be the same exact job, but it has to be a very similar job. So if I was a mortgage banker and I went from one bank to the next in the same capacity, that would be fine. That would be 2 years. But if I went from a mortgage banker to a different type of industry, construction worker or something like that, then they wouldn't look at that favorably, and they would want me to establish more history in that particular career. Being consistent is really important in your work experience to get a good rating. And then they're going to find out. So when you fill out your application, just be honest. There's no point in getting down the road and then having something jump up and bite you. Whatever you have, tell them, this is my income, these are my expenses, and this is where I really do stand, because they look at everything and they're going to find out if you're not telling them the truth. And then also make sure you just ask them, what is it you're going to be looking for? Because sometimes, we said get a pre-approval early, we'll get that, but also that gives you a chance to learn what they're looking for, and then you can start working on some of the things that will help you get a better rate or maybe a higher loan. Also, once you're in the process, you want to kind of cut back on some unnecessary expenses. You don't want, I always tell people, what you want to do is you just want to stay the same. Whatever you do, just keep doing what you do. But don't jump up and buy a new car. Don't jump up and buy a new, expensive refrigerator or something like that. Try to pay things off, or just keep going the way you're going. You don't want to do anything that raises any red flags. So get your paperwork in order, boost your credit score, and pay off debt. Also, it's important to have a good down payment. There are programs out there. Cities put on programs, counties, states, certain lenders, and they have down payment assistance programs. But believe me, it's much cheaper and you're going to save a lot more money if you just save up your own down payment and don't use their assistance programs, because they're probably going to end up costing you more in the long run. Thank you. I hope you found that helpful.